Hello, I'm Dr. Cheryl Dunn, here to demonstrate an intermediate financial accounting problem for a fictitious company called Nittany Lakers, Inc., in which we are asked to calculate the loss on a troubled debt restructuring. Take a look at the problem. Pause the video for as long as you need to read it. Okay, so we see that the company that Nittany Lions loaned money to is having some financial distress. They were unable to make their interest payment this year, and they have doubt of whether they're going to be able to pay the rest of the debt in the future. And so instead they have offered to provide Nittany Lakers with some stock that they own in another company, in Coca-Cola Company, and that stock is appraised at $700,000. So the first thing we need to do is figure out exactly what debt we're trading for that stock, the debt relief, I should say. And so the original note itself was $900,000. They should have also paid the interest payment for this year. The note bore interest at 5%. And so if we multiply this by 5%, and it was for a whole year, so we don't need to adjust the annual interest rate for any portion of that. But that means that they also have defaulted on the $45,000. So the total then is the $900,000 plus the $45,000. So the total debt that they are being asked to forgive in exchange for this $700,000 worth of stock is $945,000. If Nittany Lakers accepts this offer, it would be because they're worried that they're not going to get any of that $945,000 back if they don't take the stock that's offered to them now. And so what's happening is they're willing to take a loss of $245,000 in order to at least get something back for what they had loaned to this company. The journal entry that we would make to record this, assuming that they go ahead with it, they would debit the asset that they're going to receive, which is investment in Coca-Cola, because they're getting Coca-Cola stock worth $700,000. So they'll have that now as an asset on their books. They're going to credit the note receivable because they are accepting this settlement as full payment of that note receivable. So they no longer will have the note receivable of $900,000. They're also going to credit the interest receivable for the $45,000. And then they will debit the loss on troubled debt restructuring for the difference of $245,000. The loss, of course, will appear on their income statement as a reduction in their net income for the year, and the asset investment in Coca-Cola will replace the assets that they had in the note receivable and the interest receivable. Obviously, that asset isn't worth as much as these were, but considering that these were about to become uncollectible, at least the company got something for what was owed to them. That concludes our demonstration of a loss on troubled debt restructuring. Thank you for watching and have a wonderful day.